So speaking of the dollar strength that I just referenced, we do continue to see its effect on corporate earnings. Johnson & Johnson, the latest example this morning. The healthcare giant cutting its full-year earnings and revenue projections, and it blamed currency effects for doing so. Last quarter's numbers did beat estimates, and J&J Chief Financial Officer Joe Wolk spoke with our Anjali Kamlani about what drove profits in the quarter.
You look at medtech and consumer, and maybe optically people will look at first blush and say, boy, that seems like a deceleration of growth. But those two segments were facing their toughest comparisons of the year. Second quarter of 2021 was the strongest quarter by far for those two businesses. And then you throw in some of the COVID dynamic in China, where there was a little bit of mobility restrictions. That was probably worth 2 to 3 points of growth for those particular segments. So we feel really good about how we were able to deliver on the top line and also manage the rest of the P&L.
If you look at those Johnson & Johnson shares, they're actually trading higher. And this is sort of in line with, okay, they're cutting their forecast, but the shares are higher. It does seem like the company is putting this all squarely, the blame squarely for this on currency effects. So if the underlying business is relatively strong, perhaps that's why we're seeing the shares hold up okay.
Right. We saw a 23.3% decrease in net earnings year over year here. And the reason that I point that out is because even though you did have some of the strong growth, and particularly in pharmaceutical, that was really carrying that largest revenue base, sales up 6.7% year over year, and offsetting the declines in consumer health and medtech. Medtech for them and consumer health in those particular categories, that's where they're going to be looking to continue to see some of those margins that Joe Wolk was talking about there. But at the same time, I mean, this is really a company that still relies so much on the pharmaceutical line of business, putting the rest of it on its back. And I think going forward from here, even as we move into an era where there's not going to be as much focus on the vaccination efforts that have continued to go forward, even though if you were to survey the population, many people do believe that COVID is here to stay forever. It's just a matter of what relation does a company like a Johnson & Johnson, like a Pfizer, like a Pfizer, BioNTech, Novavax, and Moderna, what relation do they have with the consumers and the insurance policies as well that those consumers rely on in that kind of endemic phase as well?
Right. So a couple of things to mention here. First of all, the vaccine sales are one of the strong points for the quarter. They were much better than estimated for Johnson & Johnson. And in the past, the company has gotten questions about the competitiveness of its vaccine versus those other players that you mentioned. But that was a bright spot for the company. MedTech sales have been relatively weak. Even though this was below estimates, it's still not been a great area for the company as of late. And consumer products, remember, they're spinning that off. So that's no longer going to be a part of core J&J. And the company talked a little bit today that it's going to maybe introduce the new name for it during this quarter. We'll get some more details on the spinoff before the end of the year. So we'll look ahead to getting that.
It's got to be better than Vernova, though, right?
Vernova. Right. Yes, one would hope.